Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone is doing great. I know I saw a lot of you yesterday for our weekly notes live show, which accompanies the release of the weekly notes that I send out to you all, let you know what I'm looking at for this week in the market. And so hopefully y'all caught that. If not, you can find that back over at the YouTube channel, Simpler Trading YouTube channel. You know, if there is a question that I have probably received the most in the past week or so, we definitely addressed it in the notes. And I figure we take some time to do that here in Charts and Coffee. And that's really been a question about, Rog, what's really next for these markets? You know, are you bullish? Are you bearish? Is there a chance for a bounce and all those types of things? And the fact of the matter is, it depends on, because this is always the conversation around chop. It depends on what you're looking at. You know, it depends on the structure of the individual symbol that you're looking at. So a lot of folks have reached out to me since I released the notes, the weekly notes last night, saying, Rog, wait a minute. You're actually saying the NASDAQ could bounce? I thought you've been bearish. I thought, you know, back on the 14th, you said, here's why the S&P is breaking down. And it did. And that is true. So what I think throws a lot of traders off is the fact that when you watch Chucklehead television, they're all making prognostications about where the markets are going to be in 3, 4, 5, 6 months, or whatever it is that they do on that on TV. The truth of the matter is, we're traders, right? We're not looking at usually time horizons greater than a couple of months, right? And if we are, that's where we start to think more about whether or not we want to be a position trader or maybe just focus on investing. So let's get the time horizon always straight. When I'm talking to you all about, when we're discussing market behavior, we're doing it from the perspective of what's going to happen in the next few days to the next few weeks. So let's always get time horizon straight, because I think when we don't discuss time horizon as the foundation of the analysis, that's where things get really confusing. Most disagreements about market movement could easily be solved by one person telling the other, oh, but my outlook is the next few days to few weeks. So that's always what is my view on a daily time frame as a trader. And so as the NASDAQ has, absolutely, there's been no question, this thing has been moving lower, right? No doubt. However, is it a downtrend yet? And when you take a look at the trend reading here on the chart, you can see it's not. So that's where, if you take a look at the notes and you look at the way in which we're going to tackle the questions here in our Q&A part of our show here, you're going to see everything's predicated on, yes, it's weak, but let's always differentiate momentum from trend. And that is something really most traders simply do not do, because they don't know to differentiate near-term momentum from a longer-term trend. So we'll do a lot of that as we go forward with the show here. So as always, the show is about your questions. So let's just kick it off at the very top here, and kicking it off with Hal. Sure, Halliburton. Hey there, Michael. So what's the plan with Halliburton? So when you take a look at Hal, is it an uptrend? Yes. Is it the same quality uptrend that we've seen in the past? I'd say, yeah. I mean, we're double green. We have one blue grab candle, which simply means that price action closed inside the 34 EMA wave. Halliburton, of course, is part of this narrative here. Looks a lot like OIH. So if my opinion of OIH is that it's most likely to keep going higher, my opinion of Halliburton is, being the number 2 weighted name in OIH, my expectation is it will as well. And remember, I'm far more bullish oil stocks, and have been for weeks, if not months at this point, than I am oil, because oil's been subject to geopolitical issues, OPEC shenanigans, all sorts of things that have kind of shaken up what was once a really nice structure in oil. And I say a couple of months, because once we went parabolic through the end of March, that's the beginning of usually a lot of mess. A nice vanilla trend is great. Once it accelerates or goes parabolic, that's the techno babble, right? Now things are kind of at the very tail end of likely the structure of the trend. We're still bullish, but now we've got to think about oversold buys. So I like Halliburton. I do, pulling back. If crude can pull back, we'll look at some USO calls. Next up, hey there, Gwen. On days with large movement, like we saw Friday. So again, we're talking specifically the indices here. Do I look for buying opportunities on those days? That is exactly usually where my focus is going to go. On an up day, I'm not looking to buy. I'm looking at targets and follow through. On down days, you're right. Things are on sale, but not everything, right? Of course, in CHOP, we must be so much more selective. Individual sectors, individual stocks. But as a general rule, yes, I start looking at blue light specials, as I like to call them. So then the question becomes, do I wait for the next day? Waiting for the next day really comes down to whether or not the move was outside the historical volatility. And I know that's probably new for a lot of traders. There is a specific number of points that every market tends to move on a Monday, Tuesday, Wednesday, Thursday, Friday. Even intraday, there's a typical number of points that any market tends to move between 9 and 10, 10 and 11, 11 and 12, etc. So I'm always going to go back to that volatility type approach. And by the way, if you're interested in, okay, Rog, that makes sense. There are patterns to volatility. I didn't know there was a way that I could see that, decode that. There is, and there is. So we're still a little ways off, but it's almost May. So come, I believe it's mid-June, we're going to start doing some webinars on the way that I use volatility. And I'm going to be actually introducing you all to the concept of hourly price movement ranges and daily price movement ranges. Some of you probably already know this, but I'll be introducing you a lot to a way of looking at the market that is really no one else is doing it. And that is, what's the typical movement? And Gwen, your question lands squarely on that, which is, do I want to wait? Oftentimes I will, but we don't have to. It depends on the amount of movement. But I love that you're asking the question. All right, next is, a follow-up question is, will I utilize post-earnings price action for entry should price action move into the wave, or do I give it time? So again, sort of a follow-up to what if it's happening on the heels of earnings. Now, many of you know, especially if you've checked out the 642 earnings window, a strategy that I've used forever. It's laid out for free in detail over at countdowntrader.com. And the idea is, focus on rallies in double green markets and focus on tumbles in those double red markets, and do not trade through the actual release of revenue and earnings per share through earnings, but rather to it and after it. So an aftermath trade, it depends on the structure of the market, Gwen, and of course the movement, but generally speaking, yes. So good stuff, and thank you very much. AJ, how are you? Considering the uncertainty around rate hikes and various Fed heads creating volatility, AJ, if let me finish reading it. The old adage sell in May and go away starting to kick in as you get closer. Okay, two big questions there. Number one, there is no uncertainty, AJ. There's volatility. I completely agree with you there, my friend. But there's no uncertainty. The only uncertainty that's happening is focused around, how is the market going to react to likely at least 75 basis points of hikes before July, or looking at, and let's see here, I'm trying to go to the CME. Well, let me show you how to bring up this thing that I do. It's type in your Google CME FOMC Fed Watch. All right. Heck, if you just type in probably CME Fed Watch tool, that'll get you there. There you go. Countdown to FOMC CME Fed Watch tool. And I don't know why there it goes. There it goes. So there's very little uncertainty about what the trajectory of rates are going to be. It's really about how quickly it's going to go higher. So I just want to make sure I tackle that. Volatility wise, I think there is an extreme amount of under um, discounting that the markets broadly, that market participants are broadly exhibiting when most of the retail traders and investors that are in this market right now, I would say most of them, the most active, have never been in a tightening cycle. Most traders, interestingly enough, have never been through a tightening cycle. And that's because we really haven't seen one in over 10 years. And so I know one like this. So this is something where, sort of it's being very underestimated what it's going to do when we see the reverberations of higher rates throughout an economy. So sell in May and go away, I've actually never adhered to, and I'll tell you why. It actually is not necessarily true. And even if I am, oops, sorry about that. And even if I am looking at a sell in May and go away type situation, please remember that more so than seasonals, right? And I love this question. More so than seasonals, we want to think about the structure of the market. So that dovetails with the seasonal. And we want to think about what we typically see on a detrended basis in the equity markets. And this is where I can't even begin to say this without sounding really kind of silly. I say silly, obnoxious. Most use of seasonals are so poorly thought out, where it's just these little phrases, and it sometimes then leads other people. Let's say if I just ran around saying sell in May and go away, I'm doing you such a disservice. And again, I love this question. Take a look at the seasonality of the last 10 years of the Qs. Take a look at the seasonality of the last 5 years in the Qs. So is sell in May and go away really true? Now, we might see, again, seasonals are easily going to be overshadowed by Fed action. So let's remember that the most important macroeconomic factor in any market is what is the central bank of that country doing with rates, and what are they doing with money printing. So I've never done that. It actually doesn't make any sense. It's one of those things that's said, but no one questions it. So what I want to show you is rather than me say no, don't do it, I want to show you the data from which I'm making that decision. And so now you can say, Rog, it kind of looks like, as a general rule, that's not true, right? So, I think there's so much dogma in the markets that it's our job as traders. And I love that you all are here for Charts and Coffee, because that tells me you all are not blindly following what's done in the market. You're not watching television to make your decisions. I guess I could roll up my sleeves and have my own television show, but we know that we can't make decisions in 4 seconds about a stock or about a market. And those are the things that I'm trying to push back against. The fact that, one, you don't need that. And two, it takes a little bit more thought to say, well, is this really true? I hear it said all the time, but where's the data that supports it? And so I hope that helps, AJ. And thank you for the question. Awesome question. All right, Ian, is it necessary to know about economics to be successful trading my strategies? No, I mean, that's my job, right? And no, you don't have to. When you say economics, I don't know, frankly, I don't know squat about economics. Fundamentals and things like that, I'm not proficient. I'm not a Warren Buffett mine for numbers crunching through company data. I don't believe you have to be, because that should be built into price. Chartists, like I believe we are, believe that all those fundamentals are built into price. So then the next thing is, what do you need to be proficient in? Rate of change, which is just a fancy word for trend. Rate of change movement in really 4, if not 5 pillars, all of which you can pull a chart up and look at. So that's basically money printing, inflation, GDP, employment, and monetary policy. Well, that's just a matter of understanding when different Fed speakers are going to say something, and then the way the markets respond when they do. It's not really that difficult. A lot of people ask, Rog, I want to be a trader. Should I study finance? Should I study economics? No, no, please don't. What would be better? Sociology, psychology, history. That's what trading is about. It's far less about economics than it is about just really looking at sort of a mass psychology of the way people respond to things. So I don't have any. I'm looking at my bookshelf here. I don't have any economic books. Just making sure it's true. I don't have any economic books on my shelf. I don't care what economists have to say, because how easy it is to be an economist. You go around talking about what you think the markets are going to do, and whether you're right or whether you're wrong, your job is just to have an opinion. We live in a very different space, gang. We live in a results economy. That's why I respect retail traders. I respect retail traders more than I respect hedgies and so forth. They're trading other people's money, right? You're trading your own money. No one's going to come bail you out when you have trouble. Your buddy, your other billionaire hedge fund buddies aren't going to, put 2 billion into your fund, Melvin Capital, when you do stupid trades. We don't get bailed out. So that's why I respect retail traders so much. But no, I don't think you need to know that stuff at all. I really, really don't. I haven't, and I'm 33 years in. Are there things you can educate yourself about? Absolutely. But most of them have websites that you can, read, look at these rate of change on the data, and really just demystify a lot of the gobbledygook. You know what it reminds me of? Have you ever heard why tennis was if you're a tennis fan, and I love tennis. The scoring is weird. Just weird. Why? It was designed to be confusing to keep certain people out. That's why, right? Wall Street relies on that too, right? That nobody wants you to manage your own money, because there's too much money to be made by managing it for you, right? So that's why I say that. Gosh, I think I woke up a little salty today. Maybe did. All right. Is the POC, hey there, Jillian, the same as the V score? No. Point of control, but they're related in that they're both looking at volume, Julian. So point of control, depending upon the look back, right? The data you're looking at, it's the single price level with the most volume. That's all that means. Again, it's depending on where you've anchored it from, but that's all that is. Same thing, V score is anchored, but it's the standard deviation of the volume weighted average price. So it's a Z score on the VWAP, right? So, and I know that sounds fancy. I'm an English major, gang. I actually double majored in college. I'm an English major and a psychology major. Little did I know that it would be as helpful as it is in trading to be that. But yeah, so it sounds fancy. Believe me, I am no mathematician. Believe me. All right, could XLE be ready for an entry today? So the pullbacks that we saw last week, Dave, XLE, OIH, XOP, the individual uptrending stocks within those corners of the market, they definitely have my attention. Even corners of the market around the natty gas narrative. So let me show you here the multi-chart, because this is what makes everything about relative. There is no better way. I have yet to find one even close to the simplicity of the free tools and a flexi grid layout on TOS to look at the pre-curated stocks within an ETF and do a relative performance. Nothing beats this. All right. And it's free. It's just a matter of putting some time to do the setup of the grid. If you like this, some people say, Rog, 11 charts is too much. I like maybe 8 or 9. No problem. That's what's so great. But understanding relative performance can be as simple as, what are the trade flags saying? And that's what these are, Momo and Trend, those trade flags. So is XLE ready? Yes. But you know what I don't like is things like CVX. There are a number of names here that I do not like. And it's interesting that many of the names within XLE that are holding their uptrends are lower weighted in the ETF. So I find that pretty interesting. All right, let's see. Next up, good morning, Raghee. I just joined. Hey there, Nacho. Very cool. Welcome. Glad to have you. Welcome to the think tank. Love it. What do you think of buying GLD at the open, giving it's green and sitting on a couple Darvas levels? All right, let's go take a look. I'll be in the room later on today, gang. So my Mondays are really dedicated to doing some research for you all here at Simpler and the different services that I'm a part of. And clearly a lot of that time is going to go into what we're doing next in the mastery. And not yet. On the daily, I don't see where I have a great edge. Is it interesting for us to start looking at gold to the long side? Gosh, to your point, and believe me, you're asking on a down day, you realize what rare, already out of the box thinking you've got there, my friend. You know where most people bought gold? Up here. Good luck with that. You know what we call them in the mastery? FOMO, MOMO, bozos. They're chasing price action higher in chop when in reality, take a look at the stochastic here. I am 1000% salty this morning. Y'all are warned. Take a look at that overbought slow stochastic. That's a free slow stochastic within the Thinkorswim platform. Look at that overbought level. This is chop. How do you know? Trend is neutral. So I'd like to see it move a little bit lower. We're getting really close to some Darvises on GC, not so much GLD, but we're getting there. Some Darvi, one Darvis, two Darvi. We are definitely getting there. I look at that price. This is where we start looking at those GLD calls, but it's GC we look at. If there is a futures contract that has ETF alternative, an ETF alternative, we want to look at the futures contract, even though you may not trade it. Although I like to trade both. There's options on futures. There's, of course, ETF options and GLD. So we'll get our trigger on GC, but that will likely be when we express the idea, choose your own adventure, as I like to call it, through GLD. So good stuff. Great question. Really good question to kick off the morning. I really appreciate it. So gang, I will see you all tomorrow, same time, same station. Check out that Weekly Notes Live video if you have not already. Give you a good idea of what we've been looking at. If you're in any of our memberships, options, futures, or my Sector Secrets Mastery, check out the alert section of the room. The Weekly Notes link is posted there. All right, gang, be good to each other. Today, by the way, I believe is the very last day for the 1-month trial offer for the Sector Secrets Mastery. You can check that out at Simpler Trading. You might want to write this down for those of you that have been on the fence, because I think Trish told me the cutoff is today. So if you want to join us for a month rather than having to commit to 3, I get it. It's simplertrading.com/join/sector. I think I should probably check that before I throw that out there. And usually Lorna Bot's going to correct me when I'm wrong. Is that it, Bot? Yeah, I think it's simplertrading.com/join/sector. And I think the Lorna Bot pinned it in the comments there. So check that out if it's something you want to do. Cool. It's a really easy way to come join us for a month. And, frankly, make sure we're a right fit. It's really important to me that you find a community and a group and a process that suits what you need, right? Without having to commit to a long period of time. So really happy that we've had this promotion now for about 4 weeks, 6 weeks, and it ends, I believe, today. So go grab that, simplertrading.com/join/sector. All right, gang. Same time, same station tomorrow. Looking forward to seeing you. Until then, all right, gang, be good to each other.